Can we start?
Yeah, let's go.
Okay. Hi, everyone. Welcome to today's session. This is actually a very straightforward session so that if you don't know all the orders, and sometimes when you look at interactive brokers and some of the other US brokers, it looks very intimidating at the start. Okay. So what we'll do is try to break down each trade so that it's easier for you guys to understand and for you guys to execute when you're going to be doing it by yourself. Okay. So there are actually four important or types of orders that we want you guys to understand. There's actually a lot more, but most of them we don't use, and these are the main four that we often see ourselves using. Okay. The first is market orders, or basically when you want to buy something right away and you don't care about the price, all you care is about the number of shares. All you have to do is click on a buy order. And if it asks for you to what type of order, all you do is click at market. It will give you the last price or the last asking price available, and it will fill your order right away. Okay. So what are the positives and the negatives for doing market order? The positive is that you get it done right away. Okay. You don't have to think. All you have to do is indicate the number of shares, and then once you click on market, whatever the market price is, it will give it to you. Now, what's the drawback to having a market order? Is first of all, if you have a big account and you do a market order, the price you might get filled in might most of the time be unfavorable to you. This is also the reason why we don't advise people to do market orders. Okay. So what you want to do instead is to actually put a limit order if you want to be buying any single stock right away, or if you want to have a buy stop order in the future, that would probably be your most optimal way. Okay. So think of it very similar to the Philippines. If you're using any broker account, they always ask for you what price and how many shares. The fact that it's already asking for at what price is actually a limit order. So if you look at, I'm not sure, but I think it's for all Philippine brokerages, for CUL especially, what you see there when you click in the order entry is actually a limit order. It's not a market order. I repeat, it's a limit order because it asks for you at what price do you want to be buying, and it will buy up until that price. That's actually what limit order means. So if you're lazy or if it's a very liquid company and you don't have a problem with any if you don't have any problems when it comes to liquidity, and for example, it's a large cap, then you can do your market order. But in most instances, I really advise people not to do market. It's either you do a limit order or a stop order, so at least you get the best price possible in and accurate whenever you're doing any single trade. Okay. So I'll talk more about limit, stops, and stop limit. First is a limit order. Okay. Usually we characterize the buy limit order as nagtitipid ka. Okay. So this is what you see on your CUL order entry, where you're willing to pay up to a certain limit. So for example, the market price of the stock you're planning to buy, for example, I have here on my screen, it's Rakuten. And for example, you want to be buying it if it falls down to 1,300, for example, kasi nagtitipid ka. So what you do is that instead of putting it on market, what you do is that you put an order at 1,300 here, buy limit at 1,300, and what will happen here is that you won't get filled unless the stock price hits 1,300. Okay. So this is what limit order does. In fact, if you want to be buying the stock price, and if you notice the stock price right now is at 1348, if you do a buy limit order at 1350, automatically your trade will get filled. Okay. It goes straight to the market. Okay. So this is the first part about buying limit. This is actually when we're making orders right away, we usually use buy limit as the order type entry. Okay. So what's the other side of the buy limit and the sell limit? Okay. So usually why we do sell limit is because you have a target in place. So for example, we already own the company. This is Rakuten. And we bought it here at this level, for example, at 1350. And we want to be scaling out as it goes higher. So what we do instead is put a sell limit order, for example, at 1500. Okay. So what this means is that if the stock price starts to go higher and hits 1500, then what will happen is that a sell order will come in and you will get filled at 1500. Okay. So think of both ways as what you see here in the local brokerages. Usually these buy limits and sell limits are just trying to fill in at the price that you actually want, meaning to get the best possible price as you can. Okay. So I have two examples here. The first example is, this is Upstart that I have here. And if you look at Upstart, it's just broken out from this $60 range that I have here. So if your expectations, for example, in this company is that it's a buy low, sell high type of strategy, and you don't want to overpay for a stock, for example, okay? So what we advise you to do is to put a buy limit, and then you want to put it at a lower price. And I have here, for example, it's at $62. So unless the price hits $62, you won't have your buy order kick in. Okay, I hope that's clear. On the flip side, for example, okay, you already have the stock and you bought it cheap, for example, and you want to have a sell order, for example, once it hits your target of $68. Okay, so what you do is that you place a sell limit, for example, at $68 per share. And unless it hits $68, your order will not push through. Once it hits 68, then your market will go straight to the market and it will get done. Okay, so let's do this a live example for a Hong Kong stock that is currently happening right now. Okay, so I have here, for example, on BYD. And right now, the market price is 168.3. We will put a limit order, for example, two scenarios, one here at 160 and one here at 169. So the current price is 168.4. We'll do the first one at 160. Okay. So all you do, for example, okay, before I get there, I forgot to explain first, once you first open Interactive Brokers, this is the initial screen that you will find. Okay, and when you look at Interactive Brokers, it's actually very intimidating at first because there's so many things going on. So what I want you guys to do first is to click here at the bottom left and click on the classic trade workstation by Interactive Brokers. Okay, it's much easier to use, much more friendly. When you're entering orders and looking at your portfolio, I actually advise using the classic. It's much friendlier to use. There's too many advanced things happening in Mosaic. That's why I don't recommend it. Okay. What I usually use for my charting is obviously TradingView and whatever broker I use, and then just for entering orders for the platform. Okay. So again, back to the company that I was sharing to you guys about. So I have here in my screen BYD. We'll put in two orders. A buy limit at 160 and a buy limit at 169. Okay. All you do to put in an order is click on the ask. Automatically a trade transaction will pop up. Okay. And first we'll put in the price at 160. We will have it at day, meaning just for the day. And all you do is just click transmit. So this is basically an overview about what we're going to be paying in terms of commission and the total amount for the entire trade that we're going to be doing. Okay. So at 160, once I transmit, it will go straight into the system. And if you notice in the system, it's a blue order. and it's not filled or not done anything yet. And the reason why is because the price of BYD is at 168.2. Okay, I hope that's clear. Now we'll do another limit order. Okay, limit order, and we'll do it at 169, for example. I'll put in transmit. Same thing, just transmit. This is just an overview of the entire transaction. Once you click transmit, you'll notice that the order gets filled. Okay, the order gets filled. It's actually here at the bottom right of my screen also. Bought 500 shares of BYD at 168.2. Okay, so basically what happened is that we put an order of 169, but because the market price is 168, it gets you filled at the best price possible, which was at that time at ask was 168.2. Okay, that's just how it is. This is basically like a regular buy order. Okay, so I'll put so this is for the buying portion. I hope this is clear on that end. I just canceled my order in the other one because it's kind of pointless right now. Okay, good. Okay, so again, usually when you're looking at buy limit orders, just to repeat, it's basically any single transaction that you do also in the Philippines. Everything is a buy limit. So at least it's very easy for you to remember. Okay. Second type of order, which is actually more important for me, is the stop order. Okay. So what's a stop order? A stop order is basically if you have a buy stop, if the price starts to go higher, and you have a price, for example, in your mind, and usually you don't want to be buying cheap, you want to be buying, for example, at the next day's breakout, usually you always have a buy stop order in place. Okay, as the stock moves higher, you will purchase at the market, and usually buy stop orders are always done above the current market price. It doesn't make sense, for example, to have the buy stop order below the market price because it will just get filled right away. Okay, it will happen like a limit order. Okay, on the reverse, which is actually even more important and probably the most important trade that you need to understand, is to have a sell stop order. A sell stop, basically what the name implies, is that when you're buying this stock, for example, and you have a sell stop, meaning this is your cut loss point at $161 per share, right? If the stock gets hit at $161 per share, then what happens is that a market order will come in and it will get you out of that position. Okay, so usually we do both trades all the time. Okay, so for example, we have a company like 780, which is up, right? So usually like a lot of systems that we have are usually buy stop orders because, for example, this is the first uptick and we tell you to buy the following day. Usually that means is that you want to be placing a buy stop order, for example, at 1650. Okay, and for example, the next day the price is just there. Your stop shouldn't be registered, and what will happen is that you'll just have a transaction that is unfilled. Okay, this is a very common, and this is very important also for you guys, because buy stops and sell stops are usually most of all our transactions that you'll encounter. We don't like buying cheap. We usually try to buy on strength, whether in pullbacks, breakouts in coils, breakouts in resets, breaks out in momentum. Usually we have a buy stop order. Okay, once we have a position, normally we would also have a sell stop order in place. Okay, so if I have a position in this company I already bought, usually I'll have a sell stop order, for example, here at 1520. Okay, this is just to protect us. So in case the stock breaks down, automatically an order will come in at 1520 and our position will get stopped out or sold in the market indirectly. Okay, I hope that's clear. So again, let's do another example. Okay, so for example, I have this stock 780. All you do is click on this left side here, enter 780, enter. It will give you all the options. So please make sure to pick the right one. Okay, so we're picking the one in Hong Kong, which is Tongcheng Elong, which is in SAEHK. Click on stocks, it will appear here. Okay, so I'll put a order. So we'll have a buy stop order, for example, at 1630. Okay, 1630. And right now the default is limit order. So click on it, and if it's grayed out and you don't see it, just click on this drop down box. It will show all the different types of orders. Okay, click on stop. So what will happen is that, let me fix this again, 1630, 1630. Okay, so what will happen is that we will have an order enter the market once the stock price enters or hits 1630, and will happen right at the current market price. Okay, so click on transmit. Again, the overall summary, and our order is in. So this blue status just indicates that it's already in. Since the stock price is not at 1630, this position will not be filled yet. Okay, so I'll leave it here. So this is for the day. So for example, I want to do all my orders, and this is already until it breaks out, for example. All I do is change day to GTC. GTC is good until canceled. And if I press good till canceled and I update my transaction, what will happen is that this transaction will be enforced until another next 20 days, if I'm not mistaken. Is this 20 days? Sorry, no, this is 3 months apparently. Okay, I think it depends on the broker. So for IB, I guess this is for 3 months. So this transaction will be here until the stock breaks out of the 1630 range, which we have here. Okay, that's for the buy stop for any of the positions. So usually the traders that we have, we always tell people to have buy stop orders. So for example, in any single transaction or any single stock that we include on the watch list, usually there's already a setup in play, and what you want to do to achieve and to execute it is to place a buy stop order. Okay, because we want to be buying as it follows through, not as it starts to break down. Okay, I hope that's clear. Okay, so on the flip side, okay, going back to our example of 1211, and since we already bought the company, if you guys remember, we placed the limit order, and we already bought the company at 169, which was our order a while ago, right? We already now have an existing position in BYD. Okay, so now that we have a position, we always have to have a sell stop order in the event that we are wrong. Okay, so I tell people, are sell stops mandatory? Yes, they are. Okay, self stops are very important because it eliminates the emotions in any single trade that you will do. So if you don't want to follow your sell stops, I will tell you, you will have lots of problems. Okay, so it's always best to have a sell stop in place so that every single thing that you do is very scientific and systematic in that regard. Okay, so if I have a position right now in BYD, and for example, I want to be a little bit more lenient and place my sell stop here at 159, for example. Okay, I go to BYD, which is 1211, and we already have this position. Click on the bid. Okay, a new transaction will appear. We have 500 shares here. I'll change the limit into stop, and I'll also make it until GTC. So what will happen is that until I cancel it, this transaction will be in place for the next 3 months. Okay, so we had a price a while ago of 159 here. I will transmit, and again, the summary, override and transmit. And now I have a sell stop order in BYD at 500 shares at 159 Hong Kong dollars per share. Okay, so I hope that's clear. So usually if you want to get an order done right away, I repeat, you usually do limit orders or market order, depending on yourself. But majority of the times, we usually have buy stop orders in place. So when we're buying, we usually want to be buying in strength. That's why we have a buy stop order. And once we have an existing position, what's actually the most important trade is to make sure you have your sell stop orders in afterwards. So the event that you are wrong, this sell stop order will kick in once the stock price starts to break down at $159 per share. Okay, great. Last but not the least, okay, this is just an example. So it's the same case in the US. If you want to have a buy stop at Mohawk at $36 per share, you will only buy once it hits at 36. And if you have a sell stop at 32, you have an existing position, it will only get triggered once it breaks down the $32 per share territory. Okay. So last but not the least is a stop limit order, and basically a stop limit order is a hybrid order. Okay. So what's the drawback for stop orders? The problem with stop orders is that once you put a buy stop order, it will kick in right into the market. Okay. So again, this is the same concept as to having a market order once it kicks in. The problem with purely just using a stop order is that what happens if you buy a liquid company? And for example, what I mean by a liquid company is that the bid and the ask is very much far apart, or for example, it's not traded as significant as most of your other big caps. Okay. So one example actually is the company I showed you, which was 780. This is actually a very illiquid company. Okay. So instead of placing, for example, a buy stop order, what you want to do is to place a buy stop limit. Okay. So previously we have a buy stop order at 1630. Okay. And for example, we want to place a limit until 1670. Okay. So what happens here is that once the stock price hits 1630, for example, okay, our order will get filled until it hits 1670. Okay. So the question is, why would I do it? Why would I do that? Because sometimes, for example, when your order is big, sometimes you'll get filled all the way here until higher levels, which is possible, right? And you don't want to create that distortion in the market, okay? There was a big case in the Philippines recently. I won't say the name of the broker, but what happened in that transaction was that that individual trader just placed a buy stop order. He didn't place a buy stop limit, and it wasn't a penny stock. So what happened was that when he bought that penny stock, it got filled at a significantly higher price because there was no shares available in that particular company. Okay. So when you're buying, we had a buy stop a while ago that I mentioned. Okay. This is a little bit more advanced, and you guys should actually be doing this much more in majority of the buy stop orders that you will do. Always have a buy stop limit. So you buy stop at 1630 up until 1670. That's what the buy stop limit does. And the other reason why we always have a buy stop limit is because, for example, this stock the following day gaps up here at 18. Okay. So if you have a buy stop order at 1630, and for example, the stock opens at 18, which you don't want to be chasing, what will happen is that your order will still get filled because it's still above the 1630 territory. But if you have a buy stop limit up until 1670, and for example, the stock gaps up the following day, your order will not push through. Okay. So just to give you guys an example, this is an order I had in the other day. I had a buy stop limit here at 20. This is Dario Health Drio, and I put my buy stop limit here until 2030. Okay, So the following day, it gapped up and opened at 2070. My order was actually not filled. Okay, and I didn't chase it anymore, which I should have on hindsight of 2020. Okay, but I didn't chase anymore because it was up 3-4%, and because of I have a buy stop limit, my order was not filled. If I purely had a buy stop order at 20, and for example, it opened here at 2080, I would have gotten filled at 2080 instead. Okay, so this is also one danger, because sometimes you'll have companies that gap up and then fade all the way because it was just way above that type of order that you have. Okay, hope that's clear. Okay, so what I'll do now is modify our buy stop limit order on Tongchen Elong to a buy stop limit instead. Okay, so what you do is that this is 780. To change it, all you have to click is stop and click on this drag down box, so you'll see all the orders. Click on stop limit. Now it will have two categories that you need to fill. Okay, so this is the stop price and this is the limit price. So I'll put in here 1650 instead on the limit end and update my order. Okay, so the other order was canceled, but now I have a new order that came in. It's a buy stop at 1630 and it will buy until 1650. Okay, I hope that's clear. And last but not the least is your sell stop limit. Okay, actually, I rarely do have a sell stop limit. Usually, the reason why, it's because even if the stock gaps down, you want to have your sell stop in place because you still want to be selling that stock. Okay, but in some instances where you want to be a little bit more conservative in terms of your selling, you can also do a sell stop limit, which is the complete opposite. Okay, so going back to our example a while ago in BYD, and we had a sell stop here at 159. If we do a sell stop limit up until 100 and, for example, up until 155, for example, okay? If, for example, the stock price gaps down here at 150, okay? We would still own stock, we would still own position in that company, okay? That's the reason why I don't advise too much about sell stop limit unless you're watching the market carefully, okay? So if you want to do it and do the opposite, which is sell stop limit up until 155, what will happen is your sell stop will only kick in at 159 up until 155 Hong Kong dollars per share. So same case, I'll adjust my order. Stop limit 159. The limit has to be lower, which is 155. And all you have to do is just to update. Okay. So that covers all the types of orders that you need to understand, in my opinion. There's only 4. So you have market, you have limit, you have stops, and you have stop limit. Okay. For me, if you forget most of these things, just do a limit order, which is basically the same as any of your Philippine platforms. And once you have a position, make sure you have a sell stop order on your position. That's the most important. Okay, and I feel like actually all of them are important, but I'm just giving you guys a general overview of the most important ones that you want to remember. Okay, so just to give a summary of everything that we've done, none of our orders went in except for our single order in 1211, which is done at 168.51, which is a 500 shares. Okay. So what you want to do is that when you're here, all you have to do is click on account. And basically when you look at your account, there's actually a summary of everything that you've done. Okay. So you go to account and you click on my investments, and all investments actually. My account right now is $1 million. Ang yaman ko ah. Okay. And right now I have cash left of 988,000 because of my existing position in BYD. Okay. So if you go all the way down and you see your position, this is your portfolio. You have a position here in 1211. Right now, the market, when we bought it, it's 168.51. Currently, the market price is 168.3. So this is actually real time. So if you want to know exactly how much you're making and losing, this is the place where you actually should be looking at in your account position. Okay, so right now I have an unrealized profit and loss of 105 Hong Kong dollars. Okay, so I want to close my position. There's actually a faster way to do it. You could do it the manual way. Click on bid, click on market, then you can sell the transaction. Okay. What I will do instead is if you go to account and you want to close this position because you have so many and you want to do it fast, all you do is right click. Okay. Click close position. Okay. And automatically an order will be done and all your previous transactions for that company will be eliminated. Okay. So again, it's just a lazy way to do it personally. Okay. So you can do it manually. I suggest you do it manually so at least it's easier for you to monitor on that end. Okay. So if you want to know how many transactions you've done, for example, you're sleeping and you don't know what transactions were filled, what transactions were not filled because it's the US market, all you do is click on your trade log. Once you click on your trade log, all your transactions for any single company that were transmitted during the night or in the afternoon, if you're doing Hong Kong, will be here at all these different, will all be shown in your trade log. Okay, so I have here several companies for Apple, Alibaba, Neo, Palantir. So if I just do like 3 transactions for each, so I'll be buying Teladoc, buying Tesla, buying Unity. I'll do everything at a stop. So for Teladoc, I'll just put example at $200. For Tesla at 680, and for Unity at $100. Click on transmit, and transmit. Okay, I have 3 orders for tonight, and you can sleep on it, and then once you wake up and you have an existing position, then you can actually put in your sell stop orders once you wake up at, for example, 9:30. And when you take a look at which is filled, which is not filled, then you have an idea. Okay. So you can actually attach orders or what we call bracket orders, but it's might be a little bit more than today's topic. But if you want to do it fast, all you do is right click on your existing order since it's not filled yet. And you can actually attach orders here, right click on attach, click on stop. So this attached order will only get filled if the first one gets filled. Okay, so what will happen is unless our order gets filled on our stop, which is at $200 per share, this second order will not push through. So all you have to do is also indicate at what price you are planning to sell. That's how high-tech Interactive Brokers is. Okay. Indirectly, if you go to the mosaic area, it's actually the same. You'll have all your trade log and your orders here, plus charts, and a little bit more sophisticated in terms of this end. But if you're just starting out, I suggest you just use the classic. It's so much easier to use. I prefer the more friendly one. And well, that's about it. Hopefully you guys are able to execute better in terms of your trade tonight. And I wish you guys all the best of luck in this difficult environment. Okay, that's it. Eleanor, I think we can go to the Q&A. Hello?
Yeah, you're muted.
Yeah, sorry. One of our customers was trying, one of our subscribers was trying to get in. She's having problems. Okay, so what we're gonna do right now is that we're gonna open up the floor for questions. What I need to first, what we're gonna do right now is that Lawrence, hello, sorry. Okay, Lawrence is here because he will be in charge of showing you. We know a lot of you have asked about how to withdraw, how to deposit. So what we're going to do right now is that we're going to show you the terminal. If Lawrence can share, you can share your screen, please.
Sure. Give me a sec.
Okay.
Yeah.
All right. Okay. So this is more or less your terminal for interactive brokers.
Yeah.
All right. How many of you, sorry, if you can message, how many of you are having problems trying to withdraw with depositing and so on? If you do, let us know. Okay, Lawrence, can you show them where is it that you normally go?
The way to withdraw or deposit is that you'll have to log into your account management. So basically interactivebrokers.com.hk, normally it's .hk. And what happens is that you will see you'll see your homepage, right? At the top right of your homepage, there is this 3 lines, the menu button here at the top right corner. Okay, if you guys can see it, it's in a box, right? Wait, let me just put an arrow on it so it's easier for people to see. Yeah, you'll see this this box right here on the top right corner. So you click that, it'll be a drop-down menu. And then you'll see these: home, trading, portfolio analysts, reports, transfer and pay, settings, support language, and then the classic account management. What you do is you click transfer and pay. It should be here. And then you will see transfer funds. So that's what you click. When you see transfer funds, it will ask you whether you want to make a deposit or you want to make a withdrawal. And if you want to make sorry, let me show you the next screen. Sorry, because all of these are screenshotted. Yeah, so if you want to see, it'll show you, let's say if you click make a deposit, what happens is you'll see the screen. And it will ask you to connect your bank account by ACH. I'm not sure what ACH stands for. Bank wire or online bills pay. Normally, these things are assuming that you are in a United States or Hong Kong address. So you have a US dollar bank account in any of those banks. So I'm not sure if you guys have that, but the one that we normally use is bank wire, which is this one over here. And if you click the bank wire, what happens is that you'll have to fill out all of the questions that they're having there, your SWIFT account, where the funds are coming from, right? So they can tag it. And that allows them to expect your deposit to come in. So then you can contact your bank and allow them to coordinate with them regarding your wire transfer so that they can also, and then you have to provide them with the details, which will be posted there under bank wire. Okay, so just follow the instructions when you have that. But you need to do this before you send money, because if you send money and you don't do this, what happens is that they can't track whether or not you will receive any funds. Okay, so that's for deposits. Let me check if there's a question. I think there's a question.
Yeah, I can answer the question first. There's a question on buy stop or sell stop orders. So it's usually when you have issues, this is not uncommon actually, getting shaken out right away when you buy it. Usually it indicates 2 things. One, you're still in a period of volatility. So it could be the market, or it could be that your stock is also still volatile and you're entering a period of volatility. Okay. So usually when stocks you're planning to buy on the breakout, So usually if you're buying it because there's a huge surge already that's happened, for example, it's up 6-7%, and you get stopped in, you have a buy stop order. You have to expect that volatility is still there, still present. So it's usually when you're chasing or the market is still very volatile. That's why we always advise traders or to those trading, right? What's key is that you want to be buying in a period of quietness, right? Where you want to be buying at the most optimal scenario. But I think there's some cases really nagkataon na nag-breakout tas bumalik, which I mean it happens, right? So it is what it is. Don't worry, I don't think we've gone through that too many times to count, right? But as much as possible, you want to be entering in a period of quiet period, not in a period of volatility.
Yeah, great. Regarding the withdrawals also the same thing. So if you click make a withdrawal, what will happen is that you'll see the same two things: connect your bank via ACH and bank wire. So what you do is if you want to make a withdrawal, you can click the bank wire, and then you can fill out the details. All the details will be there, and then they will be able to send it to your to whatever bank account that you filled up in that box. Now, then you just have to confirm with your bank whether or not the wire transfer is going to be, you will be receiving it or not. Okay, so you have to coordinate with your bank nonetheless. Okay, so that's normally the procedure that we use regarding deposits or withdrawals at IB. Key thing here is that regarding the fees of it, the fees will vary. So depending on your bank, the bank that you use, right? So some fees are $20 and some are different, right? So please coordinate with your bank regarding those fees, regarding deposits and withdrawals. Okay.
Okay. So, all right. Thanks, guys. Going over it, there's just something that we need to make clear first. Since we do not work for Interactive Brokers, we've had a number of people who have asked us to help them with logging in, with how come they can't see their portfolio balances and so on. Unfortunately, we cannot answer those questions, because the main problem really is that you will have to do it the way that we do it when we encounter those issues, which is we contact IB directly. As soon as you open an account, IB will give you information. They'll give you email addresses of customer support, or you can also even call them directly, as long as, of course, the time zone permits it. That is how we do it. And unfortunately, that is how most of you are going to have to do it when it comes to problems with your account itself. For example, you suspended, how come you can't trade this, and so on. All of these things, you will need to talk to IB directly, not to us, because we can't. I mean, as much as we want to help you, we cannot answer those questions. We cannot see your account. Also, one more thing is that none of us, ourselves included, and our coaches or our staff and admin, are at all should at all even be given any information regarding your Interactive Brokers accounts or Schwab accounts for us to be able to do it for you. We cannot do that, because if we do that, we will become liable for any mistakes or any problems that you might encounter. So please contact IB directly. Okay, now with regards to the BDO questions, wire transfers, and so on, you will also need to speak to your bank directly, because it varies from case to case. What I am pretty sure of is that the standard of $20 for wire transfers is the standard across the board. Now, the reason why it's $35 is because you are also charged by the receiving bank. So overall, you will wind up spending $35 total for whatever wire transfers that you do. This is the reason why we recommend that if you're going to wire transfer money, do it in one bulk rather than in increments, because some people tend to do, I'm going to deposit 1,000 first, then 1,000 later, and so on. So for every wire transfer you make, that is the same amount of fees that you need to pay. As, for example, you just wire transfer, let's say, $100,000 in one go, or $20,000 in one go, then you only pay one fee for that wire transfer. Okay, so again, the $20 is charged by BDO. The $15 is normally charged by the receiving bank. That's the reason why IB will ask you, BDO will ask, do you want us to charge it to you directly already, so that once you hits IB, you don't get charged anymore? Or do you want it to be taken away from your IB account? So those are the things, and we cannot answer that because it's a different situation for every bank. Like, for example, I use Citibank. So I have used Citibank to deposit into multiple IB accounts. Now, when I do that, because I'm using Citibank Gold, my charges are waived. I pay nothing, right? But you need a Citibank Gold account to be able to do that, as compared to if you're using just a standard BDO. This is the reason why we cannot answer all of these questions directly for you. And another thing is that when you open an IB account, as Lawrence mentioned, there is Hong Kong, there is directly to the US, and the banks that you will be wire transferring to are all different, depending on the account, on your account, on who's managing your account. So we cannot also answer that for you, because you could be wiring to Citibank, or you could be wiring to JP Morgan Chase. So all of that, you have to contact your bank that you will be wiring from to help you out with those questions. So we will try our best, though, in terms of everything else. What we can answer, we will definitely try to answer. But a lot of that it's gonna have to come to basically you working with your bank until, I promise you, it's worth it. It's worth the time, because if you do it once, what happens is that if you do it one time, you get used to it. You don't have to, you learn it once, you don't need to learn it again. So I suggest that's the best way for you to go about it. So the second, also contact IB for any account problems whatsoever. It's really best that you contact them so that they can work with it for you, because all your money is with them. It's not with us, okay? So all your funds, all your trading funds are with them. So if your account gets suspended, they're the only ones who can answer that. Now, another question that popped up was about the PDT. So, you want to be a day trader, okay? So you need a minimum amount of trades, and you need a minimum amount of funds. Someone asked, can you skirt around the $25,000? No, you cannot. It is $25,000 standard everywhere. Now, if you want to use something like eToro, that's up to you. They don't require, I don't think they require the minimum balance, but I think in order for you to day trade with eToro, you still need to have 25,000. I think that is a SEC standard in the US for all of that. If you're doing it for other global markets, I cannot answer that. I'm actually not sure. But for the United States, yes, $25,000. We've also had questions, why not eToro? Okay, we don't have a problem with any other platform. Just in terms of functionality alone, IB is the only one that has not broken down on us. If anything, it has been delayed a couple of minutes before the entries during high volume days in the market. IB does lag a little bit. You can feel it just a little bit. It'll take a couple of minutes before your order gets pushed through. But every other broker, especially during the GameStop fiasco, the Reddit Wall Street Bets thing, everyone broke down. Schwab broke down, TD Ameritrade broke down, Fidelity, eToro, everything. Okay, IB was the only one that stayed still, which is was able to stabilize, which is why we recommend IB. In terms of the stocks that you can trade or that you cannot short, because there are some stocks that if you short that are not eligible for these things, you might be able to do it once, but then they'll suspend your account. So things like that you need to be careful of, because the US is not like the Philippines, wherein if you cannot buy a certain equity, or you cannot buy a certain security or whatever, the platform itself will not allow you. The US is a completely different animal. They will allow you to get away with it, but they'll suspend you because you should be policing yourself. Okay, so these are things that we cannot answer also. So that's why you have to talk to IB and be careful with the stocks that you trade. You will know, naman, if the stock is liquid or not enough for you to be able to do these things. Also, in terms of eToro, the reason also with eToro is because surprisingly, you cannot trade everything. Okay.
I'll just clarify on eToro. The reason why a lot of people use eToro is because it's very easy to open an account, and the minimum is very small.
Yes.
Okay. The problem with eToro is that what you're actually buying are what we call CFDs. Okay. These are derivatives. These are not actual stocks. So the reason why it's because because of the PDT and the restrictions and everything, a lot of people usually, what happens is that with eToro, you're playing against the house. So you're playing against them. Okay. So in the event that these guys go bankrupt because you're playing against them, which is possible, we've seen this happen before. Okay. Well, your money is gone. That's a huge problem.
Yes,
Okay. So in
yes.
the event that eToro goes bankrupt, your money is gone. So, I mean, we don't recommend really going to eToro. So it's really up to you if you want to keep on using it. We won't, I mean, it's your money at the end of the day.
Yeah. I mean, I understand also the reason is because the account to open the account is smaller in the beginning, which is why a lot of people are comfortable with it. Plus, you can follow other traders and so on. As Edmund said, it's really up to you. I mean, we're just giving you our recommendation, what we're comfortable with. We've been trading with these guys for years, never had issues of money being lost. So that's the reason why the security and the confidence that we have with the platform is already there. Guys, would you happen to, I'm not exactly familiar with this because it says that you can subscribe with monthly fees for real-time bid and ask for $18 per month. Is that correct?
Yes, there are a lot of things that you can subscribe to. Basically, in the past, most brokerages make money by through your commissions. But since the commission charges have come down, one of the things that they did was to delay quotes. So as they delay quotes, how they make their money is they get you to pay for all of these fees for real-time quotes. And so the thing that we encourage you guys, so you can actually pay for them if you'd like. We do have accounts that pay for the NYSE and the NASDAQ quotes or the Japan quotes that are real-time. But what we did instead, which I personally think in terms of a cost savings and in terms of practicality use as well, was we paid for TradingView instead. Because TradingView, one, allows us to be able to have real-time quotes just like you would on the platform, but at the same time, your quotes are also have the proper charting platform, the watch list, and whatnot, right? So all of that in one package, which I believe is significantly cheaper than what you would be paying monthly for the online quotes that you would be paying for on IB. So my personal suggestion is to open a TradingView account and pay for their subscription, their live subscription. I think that one is more reasonable, right? And at least you can see everything that's running on the chart and everything at the same time, right? So you have filters, you have screening, you have multiple watch lists. You can actually share up to 5 users, which is the one that we pay for. And I think that one's a better deal than to pay for the online quotes. But if you do choose to pay for the online quotes, there are a lot of them that you can pay for, but those are the things you have to choose, right? Okay.
Yeah, I'm gonna have to plus one with that because I use Schwab, so I wasn't aware that I don't think they have this real-time bid and ask fee per month, but they don't, right? I think it's live on its own. Yeah.
Yeah, it's live.
So I'm surprised actually that IB is charging, but at the same time, I don't use the charts on Schwab. I use TradingView as well. So I pay for TradingView. That's definitely one of the better investments. It's really small compared to if you're trading with a $25,000 account, you're gonna need good charts. So I would suggest also TradingView and just pay for that.
I think one issue is that a lot of people like to look at the bid and ask. So let's say in the Philippines, people like to look at the bid and ask.
Yes,
maraming bid or maraming ask.
Yes.
Actually, in the US, we don't even look at that in the US anymore.
No, we don't.
We assume everything is already liquid in most regards. We don't have that issue of liquidity, unless you're a $1 million, billion, or several $1 million of account. I don't think you'll move the market that much, so I don't recommend you do that.
Yeah.
So again, I share the same sentiments. Also, just open account with TradingView, much more efficient.
Exactly, you're right. Because in the Philippines, guys, just for those who have not yet traded the US, is a different animal. That thing moves way faster than the Philippines. Whatever you've seen in the Philippines, this thing is fast. And most of the stocks that I'm pretty sure you guys will be looking at are quite liquid. So you won't be able to see, the bid and ask will move too fast for you to be able to really pay any attention.
The reason why it's the bid and ask is not useful in this. Actually, we have had traders that have paid for the level 2 and then come back to me and say that it wasn't worth paying for. And the reason being is because in terms of the bid and ask, sorry, not just the bid and ask, but the fluctuation system in the US, there is no fluctuation system. So basically everything moves in 1 cent, 1 cent increment, 1 cent in increments, right? So unlike the Philippines where you have fluctuations, depending on the price, in the US, they don't have that. So that's also the reason why we recommend you guys trading something that is $25 and above. And the rationale for this is because if you're trading a $1 stock and everything is moving in 1 cent increments, that means every time it moves, you're moving 1% in either direction, right? Because 1 cent is 1% of $1 stock, right? But if you're at $25 or at $50, 1 cent is basically significantly less in that manner, right? So even the $10,000 stocks, they also move in 1 cent increments. That's why the bid and ask is not as useful. Even the level 2 is not as useful unless you're algo trading, right? So that's why we don't really recommend you guys focusing on both, not just the bid and ask, but also the ticker. The ticker is also something that people have been clamoring for, especially in the local market. And understandably so, because since there's not a lot of activity in the Philippines, the ticker is something that a lot of people look at. But in the global markets, it's absolutely useless, right? You try using the ticker in the US is basically just for show today. The ticker that you see that's just for entertainment purposes, right? Those aren't being used anymore for any valid purpose whatsoever, considering the massive amount of trades that are being made. Same goes for Hong Kong. So it's only in the Philippines where people actually still look at the ticker. But the reality is it's something that's more of a what's the word I'm looking for? More for show than anything else.
Yeah. So I think aside from that, just the question here about IBKR, about research, stock materials, and reco list, the guys don't look at this. They have other sources. I can ask probably Edmonds or the other guys who write regularly. What are their sources for research for stocks in the US?
Yeah. There's just too much. The one that we pay for and I feel like is worth paying for if you guys want it. It is also free if you can want to try it out, is Seeking Alpha. That's one that I believe that I always normally go to and give me a lot of fantastic insight, right? So, but there's just so much. Like they were saying, Twitter is free. That one, if you follow the right people, they'll point you in the right direction, right? But for me, I like Seeking Alpha for my own research. We also have people that follow on investors.com, which is Investors Business Daily. They post all the time about certain stocks that they particularly like, right? But again, Twitter probably is the better. If you guys follow guys like Puru and Kathy Wood and whatnot, in terms of ARC, they've got everything there, right? So yeah.
Also, last on my end anyway, I know a lot of people have been asking about option shorting, puts and calls. Okay, so all of this, it's just too much for us to be able to discuss in this sitting, which was the point, was really just to be able to help you guys adjust the platform or work with the platform, the functionalities of buying and selling with Interactive Brokers. Do not worry. We are working on this. I promise you guys, on options and puts and calls, the guys are working on this. They're going to do a separate one for you sometime in the near future, hopefully, to be able to discuss this with you. Okay, but it's going to take a much longer period of time rather than mashing all of this information together in one lecture. So wait around for it. I promise we will update you on this one.
I think just to give my insight on this, we've been using options. It's not that we haven't been using options.
Mm-hmm.
The problem is that volatility has especially been heightened since the pandemic started. And so what happens is that when volatility is heightened, it's two things. One, the options are becoming more expensive. And two, because their volatility is higher, uncertainty is also higher. Plus, for traders, it's actually been much more beneficial to just go through the equity market instead. So like some instances where you want to be playing on earnings, for example, you can, but what will happen also is that those premiums, because you're playing on earnings, will become also ridiculously expensive. So I've seen options that were like 12% for 1 month. So annualized, you'll be paying 144% per year, right? So it's very expensive. So some options can be very expensive, especially in this type of environment. That's why I really advise people to just buy straight on the equities instead. But obviously, it's always important to know how to use it, especially when it comes to maybe for hedging and what's not whatsoever. Okay, so we'll probably give you guys a different insight about it going forward.
Yeah, with regards to just to touch on Edmund's topic, is that normally we use options for situations where there might be unforeseen variables, right? So that allows us to cap the amount of exposure that we have at any given time. Cap the amount of risk that we have at any given time. That means that that's basically your bar, right? If you're wrong. And the rationale for that is, let's say if there's earnings coming up, or if there's an FDA approval, or something that we unforeseen, where the market, you can't really, it's a guessing game, right? That's the only time we would ever dabble on it. Most 98% of the time we're in live shares, and as long as the shares are liquid, I don't think it's something that you guys should be worried about. It's one less thing to worry about, kasi in terms of time value of time decay and all of those things. Maraming variables kasi sa options.
Yeah, as to shorting, so we really don't advise people to short, because our intention is always looking at this as an opportunity to be buying. So some people ask us, alam mo naman ba, ba't di kayo nag-short diba? I always tell people, hindsight naman diba? Paano pag hindi buba, diba? So you're looking at it because you see the result already going down. And obviously we try our very best to make probabilities or make bets, but at the end of the day, we don't know 100% sure whether that trade will go in the direction that we want it to go. Okay. Plus, I also believe that when you're shorting, it can cloud judgment, and it will affect you. It's very difficult to go both long and short. So that's why we also don't advise it. Let's say like you want to be like a hedge fund, you're long Shopify, you're short Tesla. We don't do that here. Usually we only go one direction, and it's always long.
The one thing to note is that we do encourage a defense position, which is cash. And it's not because we're hedging or whatnot. It's because if we feel the markets are going down, the defensive position is cash. I want to emphasize that moving forward.
You don't want to seesaw, guys. First you'll buy, then you'll short, then you'll buy again, then you'll short again.
Where you flip-flop.
It's gonna happen.
You're long and short at the same time. So what will happen is that you'll go into a position where you're both long and short. The market sells off, and then what happens is that you'll sell your long position and double down on the short, right? But because you were on the fence in the first place, if the market rallies, you'll close all your positions and then you'll go long. And then of course volatility kicks in, and then you'll go short again. It's happened so many times amongst the traders that I've worked with over the years, that it never works out.
You're gonna wind up over trading. Yeah, it's dangerous, very dangerous.
So the thing that we truly encourage is, one, to trade with the trend. And if you look at the markets are still in a major uptrend, right? There might be cracks in the short term, but the reality is that markets continue to head into new highs. So there's no reason for us to be thinking that there's any systemic risk in the short term. So that's one. Second is really that you want to be able to trade the easy money, what we call the easy money, not the hard money, right? Because like today, if you're trading the markets today, the market's all hard money. There's no runaway in the long side, and the markets aren't collapsing because the liquidity is so heavily, right? So the reality is that there is a little bit of distribution in the short term because of the overvalued nature of the markets. But what is happening is that people actually still sit and support the share prices. Right? So you have to be careful with that.
Okay.
I think this is also in addition to what's happening to the market today. So people ask us like, what have you been doing? Like people think that we don't sit out. Yeah, what you guys have to understand, we can sit out and we sit out very long. So please understand that. And so what's happening today is that people think we're trading a lot. The answer is actually no, we're actually not trading a lot, right? I always look at the markets as seasonality, right? We have a season to become aggressive, season to be trading a lot, season to be, and some people asked us before, how come we're not sleeping? It's because we're in that season, right? Now it's a totally different season now. This is a season for us to sleep, and actually um, you'd probably lose less not trading than going out and doing else and taking your vacation and whatsoever. But I mean, not now. But what I'm just saying is that it's much more expensive to keep on trading than not to trade. Okay. We're not there yet. People ask us, are we there yet? We're not there yet. I don't think we're there yet. We're still in a period of volatility. When I look at it, it's probably 4 to 6 weeks away, and we'll probably give you better insight as the next weeks go by. So the thing is, don't force trades. I highly advise, especially the ones who are new and opening accounts. This is not the market to force trades and keep on doing a lot of transactions. This is actually a great learning place for you to start watching, start monitoring your favorite companies or the companies you want to be buying when this is all over. This is a long process. People think it's not a long process. This is actually a long process. If you go over Lawrence's module on magnitude and duration, which is the very first module, you'll realize that duration is actually it's 70, 80% of the time, right? And we are in that duration point where there's really nothing to do. So you want to be patient, give this market time. It is what it is. And also don't force us to ask us what to buy, because we also don't want to tell you what to buy because we're not there yet.
We get a lot of these questions. Yeah.
But when we're there, we will give you the stocks we want to be buying. Just
Yes.
don't pressure any of us, or we will not pressure you also. This is really how the market is.
Yeah.
If you're not getting anything from these guys, if they're not telling you what we're looking at, what we're buying, it's not because we forgot about you. It's just really because they're not looking at anything. They're just watching K-drama right now, or or their shows, or playing golf. So that's really the reason why.
Yeah, I was speaking to one of my traders yesterday, and I was talking to him about whether markets are forgiving or not. And what happens is that when the markets are like this and they're difficult, it's hard to find your 9s and 10s. So when I refer to 9s and 10s, I mean you would trade the stock 10 out of 10 times, or you would trade the stock 9 out of 10 times. And what happens is that it's very easy for us now to drop and say, the markets are difficult. They're not giving me a lot of 9s and 10s. So I'll start trading these 6s and 7s, right? That's what's happening today. And what ends up happening is that the markets are difficult. You're trading 6s and 7s, and your performance is poor because you're trading 6s and 7s, right? And the markets are not forgiving. The markets are vicious today. So your room for error is very, very small today, right? So what happens in these kind of markets, that if you want to trade, you have to trade 9s and 10s today. Like, the priority is that when the markets get more difficult, the requirement for high quality trades goes up, right? When the markets are very forgiving, that's the time when you can dip into your 6s and 7s, right? But that's not today, you know. So you want to stick and trade with your 9s and 10s. Trade quality is going to be more important in today's environment.
All right, I'm going to go through these really quick right now. One, Doc Romy, if you are using a COL HK account, no problem. Please just contact the numbers that are on the website. Gerald and Rebecca in Hong Kong will be the one to handle your questions. So don't worry about them. They will respond pretty quick. Mabilis si Gerald. So whatever questions you have, yes. If you're using COL Hong Kong, which is connected with Interactive Brokers, contact them, not IB directly. IBKR, do they charge inactivity fees? Yes, they do. So if you're not trading within 1 month, they'll charge you $10, if I'm not mistaken, for an inactivity fee. So you gotta trade. With Schwab, they don't. So I'm not sure if anyone here has any intention to open Schwab. If you do, just open an Interactive Broker. But at Schwab, which is what the three of us actually use, not by choice, but the reason why For us, they don't charge inactivity fees, but IB will. Do I open an IBKR Hong Kong or IBKR US? That's a very good question. I'm actually not sure. What do you guys suggest?
No, it's I think it's regional, right? So if
So it
you
should
are,
be Asia.
if what we'll do is they'll send you to IBK,
Yeah.
IBKR, HK.
Got it. Okay. Yeah.
And I believe it might be better for you to open with HK because their support will be during the times that we're awake. Or else if you open, like with us, sometimes if you have to coordinate with an American account, you have to contact at night, right? So the hours are going to be different. So the support will be more different.
Yes. Yes. Okay. So those are all the questions that we have for this afternoon. Is there any? Schwab is a better option than for position trading. Yeah, I think so. I mean, as long as you're not day trading.
I'm using Schwab, and I've never had an issue with Schwab compared to Eleanor. So
And Lawrence, the two of us. It's not
I don't
just.
So I don't think
Position
Schwab
ka
is
kasi
too bad.
masyado eh.
Okay,
Hindi kasi siya active eh.
clarify this. Okay, Schwab is not bad. Okay, Schwab is not bad.
It's second best.
And it's not like I'm okay with Schwab. I'm not too. I know. The Schwab's never given me any difficulty or anything else. There were days where they were down, especially during the height of the GME and the GameStop period. Orders couldn't get filled. You couldn't access accounts, and basically everybody was down that day except for IB.
Yeah.
So IB had that one fiasco, 1.5 day of fiasco where people are having difficulty logging in. And that's the first time in the past
14 years, 15 years.
10 years or
Yeah.
more, whatever.
As per Bri, 14 years.
14 years with IB. It's one day in the last 14 days that they had that difficulty. And I don't know what it was.
I think,
Boss, wait. Boss is there.
I think they were being. I think
can
it was
open up your cam.
the full.
You can open up your cam. Ayan na si Chairman. Yan. Pag nagda-down yung Schwab, nandiyan na yan. Nagma-message na.
The reason why IBKR it was basically being attacked. The whole US was attacked. I think the post office was attacked. The treasury was attacked. That's the reason why nagbumigay lang siya. But it scared me also because the bulk of our business is really in IBKR. I think the reason why you would be with me with IBKR is because it's a global platform, right? So as this says, Korea, everywhere there are many markets that are under that platform. Schwab is only US, right? That's really the problem. So if you have any great story, let's say in Hong Kong or Japan, you can't really execute out of Schwab, right? You have to use IBKR. So I think really IBKR should be prioritized now, because you guys are teaching global markets anyway. You shared Hong Kong stocks, you shared Japanese stocks. So overall, I think IBKR should be the priority.
Very good, Rico. You open 2 accounts and then he's just batting on which one to send it to. So I get you. That's smart.
I think if you're very actively in the online space, you have to have at least 2 or 3 accounts, right? Yeah. Just in case, like us, for example, sometimes we lag, sometimes we have challenges, and I think it's so that you can switch in, switch out.
Yeah. So Rico,
the real advantage of IB is the ability to trade multi-markets. That are none. On one single platform. IB only allows you to trade the US, right? Doesn't allow you to trade any other market. Schwab doesn't allow you to trade any other market. IB, you can trade all the markets that are available to them. And I think that's a huge advantage. If you want to trade Japan, Hong Kong, Singapore, Europe, lahat nandyan.
Yes. Just to touch on what Chairman was talking about in terms of the problem. So IB, the most I think was that you were unable to log in, which is actually not a bad problem. If the market is messing up and everything's messing up, I think that's the best. Because the problem with Schwab is that you can log in, but you enter an order, the order disappears. You want to sell the order, and then apparently your cash balance was taken. So the order is hidden. You're trying to sell it now because let's say it doesn't go the way you want to. You can't sell it. And then you try to double down, you try to short, you do everything. They'll input all the orders. Accepted lahat yan. But it takes you an hour for it to reflect. And by then, di mo na alam kung ano nangyayari sa account mo. So that's worse. Mas okay na hindi ka makalog in. Kaysa yung mga problema na ganyan. So I would suggest, if it helps Rico, just open an IB account. Position ka na lang from there. Nancy, I'm sorry, I don't know whether long positions within that month is considered active. As far as I read before was that if you do not execute a trade within 1 month, they'll charge you. So if you have a position open, I'm not sure. I will get back to you on that. I'll do my best, and then we'll try to answer that question later on. Yeah, so I think that's it. Any last words, Edmund?
I actually gave my last words a while ago. But,
Okay, sorry.
don't worry about it. I mean, we'll try to assist you guys as much as we can. But like in most cases, for example, like for IB concerns, it's really best that you go straight to IB. There's some things we're also not familiar with for like some of the troubleshooting that you encounter. Sometimes we're not familiar also with that. So it's always best to go straight to them. With regards to the stock picks or what we think about certain companies, then that's probably the best thing that we can provide assistance with you guys about, rather than the difficulties of the software for both Schwab and IB. But nonetheless, hopefully you guys will make this own jump. And apparently more people actually came in here. I was surprised. I thought there were only going to be like 10. So that's good that there's 50 people here that really want to open accounts and do the global trading. So I wish you guys all the best. And hopefully we'll all make money together, but be patient, guys.